Hello, everybody. Welcome to Know Your Money. I'm Bronwyn Weiner.
And I'm Craig Finch, and we are from Growth Financial Planning. We hope you enjoy our podcast. Hello, everybody. Tamryn, thank you once again for joining us in our studio. Tamryn Lamb, all the way from Cape Town. Allan Gray, Head of Retail. Thank you so much. So, the year starts and we say, what's 2026? What are the markets going to do? We had a really good 2025. Is it going to carry on through to the next year? What are your thoughts on that? What's Allan Gray's thoughts on it?
Yeah, I guess the first thing I would say is probably no one knows, right?
Yeah. No crystal ball.
I think if we often actually we had one of our former chief investment officers used to say, everyone would say, "What's the turning point event?" And he'd be like, "If I knew it, it would already have happened." But I think what is maybe one useful way of trying to answer that question is, what are the questions or the considerations that we think, clients, investors should be thinking about as they look out to the rest of the year. And I pick on these questions because these are probably ones that our investment team is debating.
Okay.
Maybe we can stop after each one and you can ask me some questions. But the first one I thought of was, as you say, 2025, the markets did a lot of heavy lifting in portfolios. Just looking at some of the numbers, SA equities and bonds, it's been their best year in 20 years.
Sure.
And so up, kind of 40% in rands and 20% roughly the bond market. But then, of course, the rand appreciated, or maybe it's better to say that the dollar depreciated.
Mm-hmm.
So actually, SA equities was up 60% in dollar terms.
Sure.
Incredible.
So that's quite a performance. And then if you look at world markets, they were up, let's say, 20% or so in dollars, and are probably trading at all-time high. So not as good as SA assets, but still a pretty good kind of overall result. And then we saw some interesting kind of reversals. So, Bitcoin, everyone's been talking about for years, that kind of moved to the bottom of the charts at sort of minus 8%. And at the top of the charts was gold. And maybe, it's been tailwind from people moving out of the dollar. So when I think about that, and I think about how well the markets have done, I guess a lot of our reactions will be, everyone should just moderate their expectations a little. That's why we stay invested for the long term. We actually hope to be in the market experiencing a year like last year, but we've also got to know that, that doesn't mean we're going to have the same type of year kind of looking ahead. So I'm not sure if you guys sort of think a similar thing and have been saying a similar message to your clients.
Once again, time in the market, You have to stay. You don't know when it's going to turn. And if you thought the market was high in the beginning of last year and you decided to go to cash, you lost all the upside.
Absolutely.
And there was quite a nice tailwind before that, and then you lost all. That's why we don't ever do that. We stay invested. And you're going to get the hard discussions when it comes down. We've had many, many of those through the years. So, but always it bounces back in a big way, and we always stay that because you can't time it.
No
matter what.
You also can't predict it. To your point, at the beginning of last year, you would have looked. Okay, so you knew the year before, half the world had gone to elections. You had all this geopolitical noise, a lot of escalation in conflict. You looked at kind of some of the noise Trump was making on tariffs, and you would have said, okay, the economic growth is going to be bad and everything's going to fall over a cliff. And so you probably would have thought to yourself at the beginning of last year, things are going to look tricky. And all the headlines were suggesting that things were going to be difficult. And it just shows you that it doesn't pay to sort of follow
to listen to
the noise.
No, exactly.
And actually the opportunities in the markets will kind of be driven by other factors than what's dominating the headlines. And actually that maybe brings me on to my next point, because I think the geopolitical noise, it will continue to be with us for some time. I was listening to this podcast, this guy called Neil Ferguson, and he was saying we actually we're in this period which is a bit like the Cold War. We're somewhere between peace and war. So we're not quite yet in war because no one really wants to go to war. But we're not. I don't think you could really characterize what's been happening as peace. But that is going to create uncertainty, and it's almost, we almost have to get to that stage where we embrace the uncertainty, and that is much kind of easier said than done.
But I also think that that's where our philosophy at Growth Financial Planning is quite important. So we believe, like, we have 7 different relationships with money, but there's a portion of your money that you need to keep for within the year. There's a portion of your money that you need to save towards certain goals. And there's a portion of your money that you need to grow. And all of those ones would go into different portfolios. So if you put all your money in keeping, in cash, you are not going to do well. If you last year had so much money in keeping and nothing in growing, you'd be upset with yourself. But each of them are different versions of you. And I think our philosophy is to teach clients to understand that there are these different versions, and you can't look at how well the equity has sort of done last year, because that is only for you in 30 or 40 years' time. So you've got to sort of forget about that money.
But it's hard to, I guess it's hard to kind of defer what you want today for your future self. You kind of know your future self might be a bit annoyed with you, but it's your future self. But it is a really important aspect. But it does, I know we're going to maybe talk about it in another episode, but we do often see, and we've got some examples of data we've seen in the platform on client behavior, how people's risk perception, so how they feel about their portfolios changes based on, what's doing well, what's not doing well, or what's been happening
and
in
what's
the market.
noise. Yeah.
And so it's, and both of those are actually what's just happened and what's been doing well. Neither of those are good indicators of what is going to happen or what is going to do well. But yet we can see it influences how people shape their portfolios, and sometimes in showing the information, we hope it helps counteract some of that behavior.
But also South Africa's had a negative vibe last year. A lot of negativity and corruption, etc. We know all that. But the market did so well. It's just incredible how that...
And I think that's one of the second questions, or second group of questions we've actually been asking ourselves. So it's, what is the outlook for SA assets? Because as you say, there really has been a kind of like a cognitive dissonance between what actual businesses have been feeling on the ground and what assets have done. That said, I think some of that is explained by, a lot of that asset equity growth was through precious metals. So you saw this big divergence in returns between gold and, even the kind of the platinum businesses that were scraping the bottom of the barrel in terms of profitability have been doing kind of really well. So I think when we look at SA assets, we're a little bit more cautious, and we're trying to find the opportunities that maybe in the areas that haven't done as well. But because some areas have definitely lagged. But actually SA bonds, even there are economic there have been some improvements to the overall economic situation. But I think, sometimes life is relative, and we look relatively a little bit better than we did, a year ago or 2 years ago compared to other emerging markets and compared to the US. And so we can see that in bonds because foreigners started buying
again.
Towards the back end of last year. And that is important for confidence and for liquidity and for the ability of the government to finance debt. But some of the other... there are other trends that have been happening for a very long time that we can also feel like they're starting to change. But it's interesting, trends happen for a long time until they persist for a long time until they don't. And there has been we've been almost in a one-way type market. And I can go through all of the ones where it's been going in one direction, like the US. Everyone thinks the US is amazing, and I'm not suggesting that one bets against the US, because you've got an entrepreneurial bunch of businesses and great capital markets and lots of good corporate governance. But the market valuations have been very extended for a while. And last year we saw countries outside of the US outperformed the US for the first time, or maybe the biggest margin in almost 9 or 10 years. And then some of the other kind of areas are the Magnificent Seven. So those have been doing well for what feels like for a lot of people forever. But even in last year, you started to see people questioning, okay, well, businesses are spending a lot of money on AI. Who's going to win? So rather than just push money into any business that's spending on AI, actually trying to discern between the winners and the losers. So you look, Alphabet was up a lot and Amazon wasn't. So and the reason I highlight some of these trends is not that I think we should be building the portfolio based on trends or that I know when the turning point will be, but just that be careful not to look at something that's been in place for a long time and not zoom out to the context of the much longer term history, because you can then almost anchor to what's just happened and not realize that it's changing.
Great. Looking forward to the next episode about behavior and how clients react to trends and geopolitical.
Great.
Thanks, Tamryn.
Thanks, Tamryn. Thank you.
Thanks.
Thank you for listening. If you have enjoyed this podcast, would like to subscribe, please visit our website, www.growthfp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.